And the way I've tried to get people to understand this point, I've been writing about this for a while, is how we discovered cholera. So mostly it's all done by scientific method, and you test it in a lab and it gets refuted. You write a paper and somebody else, and goes on and on and on and on. Cholera was an urgent, pressing need. And they got that guy who mapped out London and said, where are the outbreaks? What's going on? Mapped it to local environments. They thought it was airborne. They thought it was something else. And then they just figured out it's water pipes. And they realized it was the Thames. And it was pattern recognition that actually brought that thing. And this is what these models are going to be so good at, where we couldn't see the pattern. This is the pattern in economics you were talking about before, because we look at it from these defined views. It doesn't have that bias.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge.
Raoul Pal dives into the coming deflationary shock, the rise of digital assets, and the collapse of old economics. Let's watch.
Yeah, like I did it by going back and forth with billions of tokens of the top models. And so I had a hunch, would I have formalized it without these AIs? No. Because again, this is how I built my kind of map. But it isn't just patterns. This is the really important thing. It's contexts. And so when you're trading the markets, what you're doing is intersubjective contexts. I know this bit about oil. I know this bit about rates. I know this bit about money. It's combining all the patterns and layering them on top of each other. And that's what these models do all day long. That is literally the code of these models. And so this is why what we're going to get is the economy is going to be run by the AI. The role of humans in the economy is something we have to figure out. The very value flow of our current capitalist system is going to change because of this, because you can't outcompete the AIs or the owners of the AIs, and the AIs might own themselves. It's going to be really weird. And then what happens?
When do we get to this point where you hit this dark curtain, you can't see the other side? I kind of think 2030, 2032, beyond that, it's impossible to even know anything anymore.
In the next 1,000 days, max. And again, there's lots of ways you can show this. Your job, if you can do on the other side of a computer screen, can be replaced by an AI. Not will be, can be. Plus a certain number of tokens. And so then it's just a question of, hey, I work as, again, a San Francisco Railway Metro person. I'm fine, you know? I'm an accountant, I'm screwed. You know? Like me, again, I've got my network effects, my relationships that keep me going, but then it's going to be free on Excel or free on any bank software to do it. Like literally the cost will be free to do your accounts and your taxes, and it'll do it all with full privacy.
I mean, we're all using it for all of our contracts, right? There's no point going to a lawyer until the last stages now to get a seal of approval.
Again, we'll make more mistakes than this thing will. And this is, again, just with the prompting. It's not being proactive. These new agents that are literally now are proactive. The latest GPT-5 went from 16% hallucination rates to 1%. We're solving all these final bits. We're putting them together. And again, the way that you will talk to your AI next year, or if not the year after, is like this. Literally like this. You'll just talk to it. And it'll give you a call. It'll give you a message. It'll be like Jarvis on steroids, right? And so people haven't realized that this happens at the same time to everyone, everywhere, in every language. And then that consumer surplus disappears. All the entry-level jobs, and then it goes up, the curve disappears. And then you think about the taxation base is $5 trillion in the US. $1 trillion is corporation, $4 trillion is income tax. To give everyone in the US poverty-level UBI, $16,000 a year, is $5.3 trillion. We need to rethink literally how money flows. We need to rethink so many things.
Well, also, money doesn't have value when the most valuable things to us that don't have scarcity become super abundant. What is the point of money?
BlackRock just made headlines again, this time for offloading a massive 2,700 Bitcoin worth over $292 million in just 24 hours. The move comes as crypto exchange-traded funds, ETFs, see another wave of outflows, with total losses topping $519 million this week. Despite the sell-off, BlackRock still holds an enormous 802,810 BTC, valued at more than $87 billion, keeping its position as the world's largest Bitcoin fund manager. The timing couldn't be more dramatic. The outflows hit just as BlackRock faces scrutiny over a $500 million private credit fraud scandal linked to its newly acquired HPS division. Court filings allege forged contracts and fake invoices used to secure loans, raising serious questions about oversight at the world's biggest asset manager. Other major players like Arc, Bitwise, and Fidelity also saw withdrawals, but none on BlackRock's scale. Yet, even amid these heavy outflows, Bitcoin isn't flinching. Prices climbed past $110,000 on Friday. Traders are now watching closely, as analysts warn that a breakout above $112,600 could trigger a $3 billion short squeeze, potentially setting the stage for a wild November in crypto.
That's exactly it, Just like, how do you have a labor market if the value of human cognitive labor is negative because you're the dumbest person on the team? There is no labor market for human cognitive labor in a few years.
And, this is where I got to with my whole thesis on NFTs, because it's proven digital scarcity. It has value. In a world where we don't know what the hell has any value anymore, there are things that are digital that can have value, that are interesting. There are physical things that can have value. Nature probably has value. Experiences has value.
Well, again, its attention has value, right? And there will be a way of having human things. So in the book, I outline a Bitcoin equivalent and a universal cash payout pegged against that, where everyone gets a free AI and then you get money for being human. So we can put that to the side for now. That's like one mechanism. We'll figure out a mechanism to get people paid, right? We'll figure out a mechanism of value, but again, we need to have a model that works with that, which the current economic system doesn't. What I can say is this, though. The digital asset bubble that's going to happen from next year will be way bigger than the AI bubble. Because as a policymaker, what option do you have to increase monetary velocity and get the old capital, digital assets? That's it.
And also for the rest of us, there's another incentive. Is like, this is the only way to unfuck our future, because we can't make the money out of the AI, but this is all connected. We know it goes up alongside AI. It's got network effects and behavioral incentives. So it's just going to absorb so much capital as people panic into a future of which they don't understand.
Whenever you make a new money has to flow from somewhere else. I mean, again, there's so much value in the economy, right? Next year, you will have the X chain and X coin. You will have Stripe coin. You will have Amazon coin. Again, I think the SEC and others have actually gone too far. I think it's gone too legal, which means there's no regulation. So again, the AI bubble, you can't get exposure to. You buy CoreWeave and a few of these other, again, you look at the economics of those, and I would say their second biggest. What is it? Digital assets, anyone will be able to buy with Apple Pay from their phone. And they will say, screw you, I'm not taking this old economy money, I'm going to this new thing. I'm not saying it's a good thing. I'm just saying it is what it is.
It's exactly where I got to, is like, in the times of the systemic stress of what is about to happen, these things become a focus of attention for people to find a way out. And, I've lent into that a lot. The other thing we've not talked about, which is the other force, is all physical labor is about to go to zero value as well. Because of the fucking robots.
It just gets better, doesn't it? It's like, like you got 2-3 million truckers, and there's two ways that you can replace them effectively. One is that you retrofit the trucks and you buy new trucks. The other is that a Tesla Optimus walks into the truck.
That's right, and drives it.
And drives it. And so much labor is kind of enabled by that. And if you look at the latest unitary robots, like the R1, $6,000. And these things can do just about everything. The fingers are being propriocepted. And people don't understand the economies of scope of these models. Once you train a model that's good enough once, it just becomes about, can you get enough robot parts? And that's it.
Zcash's ZEC is stealing the spotlight this Halloween, shocking traders with a monster rally while the rest of the crypto market bleeds red. The privacy-focused cryptocurrency has surged nearly 500% in October, climbing to around $390, its highest level since 2018, even as the total crypto market slipped by more than 2%. So why is EZC the only coin pumping right now? A wave of celebrity endorsements has fueled Zcash's meteoric rise. It all started when renowned investor Naval Ravikant called Zcash insurance against Bitcoin, igniting a 60% surge in a single day. Soon after, Solana developer Mert Mumtaz predicted a $1,000 target, and BigMex co-founder Arthur Hayes joined the frenzy with a bold $10,000 call. These high-profile mentions sent traders scrambling to get in, creating a classic FOMO-driven rally similar to Dogecoin's wild ride in 2021. But behind the excitement, technical warning signs are flashing. A rising wedge pattern has formed on the charts, hinting that Zcash's incredible run may face a harsh correction. Analysts suggest a potential 30% pullback toward the 260 to 270 support zone in November, if momentum fades, a test that will reveal whether Zcash's comeback is just hype or a lasting breakout. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoin Zella for daily news all for free. That's all for today's video. Until next time.